What's going on, guys? Ross here from Shamu, and what an amazing day we've had. I know you might be thinking an amazing day. It's been a terrible day. Everything's been bearish. Yeah, but when you're still bearish, like me and those in my community, uh, we like to see things moving in the direction that we thought. I mean, as we're staring at the S&P 500 here, it's dropping as we speak. But today we've traded in this range, started off the morning at $373.52. Right now we're trading at 362.08 with a daytime low here of $360.94. So I had a massive dive in the market today. After 2 days of our first 2 days of the week here, we had this massive climb up. Now, if you look on Tuesday, I made a video saying, is the bear market over? Because anytime you have these pullbacks like this, people are, oh, it's the bottom. No, it's not the bottom. And I want to talk about why it dropped today and what this means for next week, because you're going to want to keep your eye out on this and trade wisely. So today, the unemployment situation summary came out, and this is essentially what made the market move as big as it did today. I know some people might think, it could potentially have something to do. I've heard this because I listen to a lot of podcasts and stuff. Oh, it could also have to do with, the nuclear crisis and this, and this. And while that's true, and I was thinking it was going to play into that this morning, I was watching at the pre-market. Pre-market traded flat with it basically up until 50 seconds after this report came out. So the biggest thing that moved the needle today for us was the unemployment situation. We're not going to go through this entire report because really most of it was pretty close to as expected. There were a few differences. For instance, the unemployment rate edged down to 3.5%, which I know sounds like, oh, that's good news. Not for the Fed. They won't come out and just say this, but they actually need to see more unemployed people to start achieving their goals. And so 3.5, it's a hotter than expected report. I think it was like 3.6, 3.7 before. So it went down slightly. The big thing though, that is really causing people to be bearish, and I'm going to scroll down here to see where this was. Okay, right here. Average hourly earnings have increased by 5% year over year, and it went up another 0.3% just this past month, 32.46. Here's the problem with that. We're trying to fight inflation. We're trying to get the CPI down, and you can't get the product pricing down. Companies can't lower their prices if they have to pay their employees more. Otherwise, you end up going into an earnings recession. And so they can't get their prices down lower if they're paying people more. Now, here's an interesting statistic that I just heard, that over the last year, people who just kept their jobs, most of them experienced about a 7% increase in their pay. But if they left their jobs, they received almost a 15% increase in their pay by taking on a new job. And that's a bad thing, because when you're trying to get people to, when you're trying to get that CPI down, and you don't want people feeling like they can just leave their job and go price shop. And so that caused the market to be, to view this negatively, and that's why you've seen this massive sell-off today, and you're seeing this go even further right now as we're speaking. Now, here's what this means for next week. So you see here, you have these scheduled releases. Next week we have one, I think it's on Wednesday. What is today, the 7th? Yeah, so let's see. Actually, I'm sorry, this is on Monday. So on Monday, we're going to be getting the CPI at 8:30 a.m. Eastern time. And based off the data today, obviously anything could come out, but if employees actually got paid more, likely it's not going to be a good report. It's likely going to be a negative report, which is going to send the stocks even further down, keeping this bearish momentum going. And the reason for that is because if the CPI comes out high, then it's almost for certain that they're going to have to do another 75-point basis rate hike in November. And so we, not that it's not that we enjoy in our community seeing people lose their 401ks, and we enjoy, seeing people lose money in the markets, but we're doing a lot of put debit spreads. We're hedging against it. And I'll be honest, this last week, we didn't make a lot of money because we were bearish Sunday and Monday of last week. And then you had this massive, upturn in the market this week, and it was unprecedented. There was really not much holding it up. And so I was extra careful to be putting out videos to everyone in our private group saying, don't panic sell. Do not just get rid of your positions. Don't be scared. I know it can be hard to look at your portfolio and see things going backwards. This is not going to last. It is going to come back down. And we're seeing that happen right now. And so, I hate to say I'm happy to see this is the way it's going, but I'm happy to see this way it's going. I mean, everyone has access to the same information that we do, and yet, people make their own decisions to trade. But anyways, that's what we see going on right now. I think that next week, following the CPI report, I can't imagine that it's going to be great. And if it is, we'll see what happens. But if it's not, that's going to be even worse for the market, because that's going to mean more rate hikes, which is going to mean, more suppression in the market. So anyways, hopefully you guys enjoyed this. You found this beneficial. If so, please do me a favor, like and subscribe. I'm really enjoying this. This is a passion of mine. This is something that's very fun for me. And, it just doesn't feel like work to turn on the camera and talk about this stuff. It's very fun. Just looking at the charts here, a couple things that I noticed is that the stochastics, our main average here is starting to drop, but our K line has not caught up with this. So typically, once this catches up, it can mean, a short-term reversal to help it breathe. I'll give you an example. You saw this fall here, and once it drops below this 20, there can be a little upbeat here, as you can see in the price action. It's usually considered an oversold position. It can breathe, but then it can keep on falling. So it doesn't always mean that, oh, it's going all the way back to 80. If we look at our RSI, we still have some room to fall here before we become into an oversold position. The stochastic tends to be a bit faster of an indicator. The RSI here, when you hit 30, you're getting to an oversold position. Just, looking at the last high to low, if we were to do a Fibonacci retracement here from the previous high to low, which would technically be this pullback right there, I would not be personally surprised to see us busting through this 357 price mark by next week. So, call credit spreads, put debit spreads, they're all good. I'm still trading day charts because it's just a little bit easier. It can be a little bit scarier for people when you're holding through a day chart, when you have little uptrends like this. But I'm a big fan. If you guys don't have this Shamu indicator yet, you should definitely get it. There's a lot going on in here, and I'll show you how this works. But you can see here, it tells you when to short a position. So it gave this signal here today at time this was today. I can't read military time, 4 or 5 hours ago. And so it's telling you, hey, sell, sell, sell. And so we'll see, it has about an 86% accuracy rate on it, which is pretty good. We did just recently add this market sentiment score, which can also put a little wind at your back. So I'll give you an example. If I go to, for instance, Crocs, which is one that I'm currently in here, and let's go on to the day chart. You can see we get this bearish market sentiment score, and it's taking in 6 different indicators and looking at how things stack up. Is it bullish? Is it bearish? Or is it neutral? And then it lets you know, hey, this is what's going on. Is the wind at my back or is the wind against my back? So my thinking here, for instance, on Crocs is I believe that next week this is gonna fall as well. You can see that our stochastic is lined up for the fall. In fact, we've already crossed through this K line, and our RSI looks like we're moving down as well. I think that what we'll do is at some point here, we're gonna break through this and then we're gonna quickly gap fill, which would be great. Once again, down, if you're interested in joining our private group, you can do it by checking out the links below in the description. If you just want the indicator, you can just get that at shamu.io. Until then, you guys have an amazing weekend, and we'll see you soon.